All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market, had a nice little morning down. Has had a little bit of afternoon up, and really just kind of back into that area that it kind of settled in yesterday afternoon. And if we back out S&P futures to a 1 hour view and just take a look since last Monday. Right, so we now have about 2 weeks of action here. We could see 30.20 the high, 27.75 the mid range, and market sitting here closer to the high than to the low. With everything that's going on, with all the carnage out there that happened in a couple days, all the volatility, that's what we still see. Now, you'll also notice, in fact, I'll zoom back out. Check this out. This is pretty. This is pretty. Pretty cool. You don't see this very often, but here I have the volume bars, and in fact, let me make them bigger, just to a little more impact. This is the volume here in S&P futures, right? Today, yesterday, Wednesday, Thursday, Monday, right? Friday, Thursday, Wednesday. Look at the bars compared to everything prior. Very different, right? Just very different, dramatically different in terms of volumes, and it has been a much higher volume. And, that's typical of a summertime, market. Summertime markets are relatively low volume until something happens, and then they can be some of the highest volume type of markets. And so that's what we see here with the market here this week and with what's going on. Now for the challenge, there are no new signals on the board. In fact, if I'll just pull up the 3-7 crossovers here for the challenge. You'll notice there's an absolute lack of 3-7 crossovers happening, too, which is what is needed to create a trigger. And let's see, where did that go? All right, where did they put that? Scan. All right, it's not bringing it up. They did a whole bunch of updates to the computer, so a few things switched. So let's see if we can try this one more time. Bottom line, the only stock on the watch list that has an upside crossover is Verizon, and it is not signaling here. And there are no downside crossovers that are out there here today. We do need to see the market rally a little bit more if we're going to get any significant downside crossovers. So that would not be too bad to see. Let's see here. It said that pop-up was blocked. So let's see here. I'll have them work on it fix it this weekend. But bottom line is, just no real even triggers here when it comes to the challenge. Now I was thinking this afternoon, okay, what do I show? What do I kind of look at? We've talked about some trade setups. I pulled the trigger on the SPY here just shortly before I got on video. So the SPY, put spread that I talked about. And basically that leaves me with a half of VIX and a kind of a long shot, or half of VXX, kind of a little bit of a long shot SPX. I'm not very heavily involved, even personally, in the market going into the weekend. One of those where I just, they just don't have stuff that I'm super in love with. I do think, Monday we could see a very big move in the market. But this weekend is when I will spend a lot of time, really assessing some of the changes in the market, because we saw the market change, basically last Thursday, Wednesday, Thursday with the Fed and Trump, and those two elements shifted. Yesterday, we heard the Fed kind of one member of the Fed, backtrack just a little bit. But, it's one where the trade war stuff, I think the market's going to have to come to grips with the fact that, trade war may not have a resolution. Right? the resolution. It may have to completely, price out any sort of resolution, and I don't know that the market knows what it's worth. It's something that, let's face it, is brand new. The consequences, they could be amazing. The consequences could be dire. There are arguments on both sides, and so just very interested this weekend to kind of see how weekly charts kind of all pan out. And so I thought, I'll jump on video. I'll show you some of the weekly charts that I tend to go to right away, that I like the most, to kind of say, okay, you know what's really happening out there. This is the SPY. Right, this is the SPY, and this week is going to, well, here we go. This week, for all the movement, right, the market is down 0.13%. For all the chop, that the market is at. And remember, we talk about the challenge, survive the chop, thrive in the trend, right? This has been an absolute chop. And one of the reasons why I believe we haven't seen many signals, we haven't seen real trend, and we just kind of can see that here with the SPY. So while yes, it may feel like the market is super bullish because of the last couple of days, or super bearish because of the early week, the reality is it went nowhere this week. You think about that. You think about that. Everything that's happening right now, the massive escalation of the trade war, the market's unchanged for the week. That's pretty interesting. That's there's a level of insanity to that, right? Kind of just wow, type of approach to it. So do we see that in other things? We don't see that in bonds. Bond market's saying something different, right? Bond market saying, here, take a look at this flight to safety. And the reality is what's happening with rates and what's going to happen with rates. U.S. rates are going to go to zero. We all, it's fairly obvious that's where they're ultimately going to go. For anyone to say the TLT has hit a top and can't go higher, it's just, they don't have a very good historical perspective, because we heard arguments in 2011 that bonds, they couldn't go any higher. There's just no way bonds could go higher. It would just be totally disruptive. It would be earth-shattering, all these hyperboles. And, bonds are now 40% higher. So it's just one of those where, the bond market, raging bull bond market continues. We take a look at, something like oil this week, right? Which is, sometimes an economic element. We can see here on the week, down 1.5%, not a whole lot in it here this week. Gold up about 4%, big up week here for gold. And then the U.S. dollar, which is pretty much had a flat week, down 0.5%, right? Not a whole lot in the U.S. dollar. So, we do see a flight to safety, right? We see a flight to safety element, but it's not, it's not at the expense of, everybody selling all their stocks, as soon as possible, right? And so that leaves a very interesting scenario, really kind of going into next week. For the markets, it leaves, the markets open to, some serious, let me back that up. Prone to some news, right? To where we could get some pretty substantial moves if there, is some news here over the weekend. The last time, we kind of went into a weekend like this was last weekend, right? And we saw China come out with a bunch of, counters to the U.S. trade war escalation. But, we've seen in the past where we go into weekends like this, or, weekends that the markets have been hit, and we see China announce massive stimulus. And, that is one of the things that China has been known for. Things start to get a little hairy. They go and announce massive stimulus, and they have all the ability in the world to do it. And, would not be surprised, because when we look at what the Chinese markets are doing, Chinese markets haven't recovered the way U.S. markets have, right? Chinese markets, they ended the year 2018 down, and they're almost down for the year of 2019, right? So there's been an incredible lag here in China, in the Chinese markets relative to, relative to the U.S. Now, I guess if we're going to go and really look at the Chinese market, we need to pull up the Shanghai Composite, which shows a little bit of a different picture, down a lot more in 2008, but, actually up a little bit here in 2019, or 2018 down, up 2019. But you kind of get the picture here, right? U.S. equities are, let's face it, even after all of this, they're near all-time highs. Chinese equities, not even close. Just absolutely not even close. The 2015 highs of 5,000. I mean, Chinese market's almost half of that today. So I would not be surprised if we do see some positive catalyst there out of China here over the weekend. The market has digested earnings season, right? Earnings season has come and gone. Yeah, we have some retail and stuff to go, but the earnings season, it's been one of those where I don't think the story has changed at all. I think things came in very much as expected, en masse, and I don't think it answered any questions, because the questions aren't, when it comes, the questions in the market right now don't really have anything to do with earnings or revenue growth for individual companies. It has to do with, the macroeconomic factors, and because those are going to weigh on the earnings and revenues here for companies. So, I do think, we continue to be in a, bearish seasonality when it comes to the August time period. So, the risks are still out there, but, we're not seeing, we haven't seen dramatic yet. Right, and I know, 100-point reversal, from Tuesday overnight to Tuesday afternoon, feels dramatic. But when we really kind of look at the charts, and when we look at the weekly charts, right, here's the S&P on a weekly. Is it that dramatic? It's really not. We've had plenty of weeks that have had, a range like this. It's not, one of the biggest outsized ranges for the market. And yes, is it a higher range? You betcha. It absolutely is. But for those expecting more drama going forward, I think you can still hold on to your bucket of popcorn and keep watch out, because chances are pretty good we're going to have some more drama here. The market vibe remains bearish. That did not change here this week. We saw it trigger bearish on Thursday last week. It continues to be bearish. The bullish percent index, you can see, has barely bounced in the last couple days, right? So while the market itself is flat on the week, the bullish percent index is down 20% on the week, 10% on the week. So we are seeing a sizable drop there. With the bullish percent index. If we look at something like small caps here on the week, they are lagging, but not by much. Very minor, very small lag. If we look at some of the various sectors, industrial, same thing, very small, minor lag. Banks, small, minor lag, but nothing too dramatic. Most things are kind of trading right along here with the market. Utilities are going to end the week in the green, as they continue to move on up here with bonds. And so, going into this weekend compared to last weekend, not a lot too different. When it comes to the bottom line metrics, the metrics are about the same, and I think some of the risk factors are definitely the same out there. Okay. All right, so the challenge is going to go into the weekend again here with cash. We've talked about it a lot this week. Where I stand. I don't want to be in cash. I hate it. Right? I don't want to be in cash. But at the same time, I look at even a bunch of the crossovers that have happened this week, and most of the crossovers, had we gone and played them, we'd be sitting with some significant losses. And the challenge is not only designed to find some of those nice gainers and nice trades to ride and play to put gains into the challenge, but it's a big part of, hey, let's when we are in chop, we're not going to get a lot of trend signals, so that should keep us out of a lot of the danger zone that is out there. I understand those that want to see a trade a minute and want to see fast action trades and all of that, but that isn't what the challenge is about. And I do completely understand that there are a lot of things that are tradable. I've tried to show you some of them here as the week has rolled on, from Microsoft to Visa to VXX to the SPX, and show you kind of some of the stuff I'm doing. But please don't let the fact that the challenge isn't in a trade stop you from making a trade or anything else. But when the triggers start to come in, challenge will go full throttle here again, and very much looking forward to it. Thanks for hopping on. Have yourselves a fantastic weekend. Thank you for being with us here at Trader Minute, and we'll talk to you Monday. Take care.